Boy, that time flies when you're having fun, doesn't it? Weekend's over. Time to get back to work. Monday evening. It's July the 19th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. If you're watching for the first time tonight, boy, it's great to have you with me, because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. Got a great video in store for you guys tonight. Charts are already in the background, as you can see. S&P's here. Nasdaq's here. You know, the gold is here, ready to go for tomorrow. And glad to see you are right here along with us. Got a bunch of great trades on our radar for tomorrow. Had those big drops down on the Nasdaq and the S&P. Would love to see some retests of those lows. Maybe some short squeezes, some short covering rallies, some reversals on the E-minis for tomorrow. Lots of great trades on the Nasdaq and the S&P. And the gold. Gold had a pretty wild ride today. Gold probably is the one market that has a little bit of a question mark as we go into tomorrow's trading session. But not to worry, though. Probably going to be a range tomorrow on the gold. So we'll look to buy low, sell high, and focus on failures on that yellow metal. Either way, though, no matter what happens on the gold, got some great trades on my radar for that yellow metal. By the time we're done with this video tonight, you'll know my favorite trades for Tuesday's trading session. You'll also know some stuff to avoid to keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow morning in the trade room. Before we jump into the video tonight, as always, I want to make sure to remind you, subscribe to our YouTube channel. I publish this video newsletter every evening, my best trade ideas for the following day. I don't want you to miss tomorrow night's video newsletter, so make sure you subscribe to our YouTube channel. And also, don't forget, if you guys have any questions tonight, drop those questions for me. I would love to answer all your questions. And as always, if you tune in every evening, if you enjoy this video as much as I enjoy making it, to be a big favorite, that like button for me. Hit that thumbs up here for us on this video. Really appreciate you guys supporting this channel by subscribing, hitting that like button, and question in the comment section if you got it. But enough of the intro, though. Let's get this party going. It's Monday evening. Tuesday is right around the corner. As you can see, I'm a little bit behind schedule here tonight. It was a busy day in the markets here today, wasn't it? Now that the dust is kind of settling here, right? What do we have here on the charts in front of us? Again, we got big down moves on the E-minis and kind of a wild session right now on the gold. I would love to short some of these bounces on the E-minis. Now, obviously, get a really strong punch going higher here. So if there was ever a time where a short squeeze or a reversal could happen, this is definitely when you're going to get it, right? After we see a strong move. So we definitely have some reversal trades on our radar for tomorrow. Got to be careful though, right? Big move down today. There will be sellers, I would assume, trying to short this thing back down to those lows here for tomorrow. But you know me, I'll make sure we're ready to capitalize on the short squeezes or those reversals going higher here tomorrow. Gold, as I mentioned, is probably the biggest variable for tomorrow. Wild ride, big move down, big move up. We're right around the closing price from last week. It smells like a range is forming here right now. So I'll be talking about how to trade that potential range tomorrow, right? Buying low, selling high. Also, you can see the buyers definitely have that momentum right now. So I've got my eyes on a breakout running higher up around that 1824, 1825 area. There are plenty of great trades on our radar here for tomorrow. Before we jump in, though, these charts, though, let's make sure we all on the same page for tomorrow's schedule. We don't have a lot on the calendar for tomorrow. It's the fourth week of the month. It's not the beginning. It's not the end. It's not the middle. It's kind of like the second week and the fourth week of the month are always kind of the strange news weeks, right? You're not going to see any Fed speak this week because next week is going to be the FOMC announcement. So you're not going to see any Fed speakers. You can see here, it looks kind of strange, right? Without any Fed speakers. The week before the Fed announcement, which is next week, there's a lockout period. They can't talk to the press. So lockout period this week. So no Fed speakers this week. And as you can see, really, for the most part, the only real big news we have all week this week, get the housing starts tomorrow, right? Nothing really on Wednesday. We got jobs, of course, on Thursday and PMI on Friday. There's not a lot of news here this week, which, can be a good thing, right? News, of course, is usually just noise, but it is nice to have some catalysts, right? Some volatility, injecting these markets. So we'll definitely be keeping our eyes open for any unexpected unexpected headlines coming out. This Delta variant of this virus seems to be the cause. I guess it's the cause for this kind of spook in the markets the last couple days. As we look at the news here for tomorrow, right? Housing starts and permits at 8:30 Eastern time tomorrow. That's the big news of the morning tomorrow. We'll see how much that gets these markets moving with these big moves we saw today. I wouldn't be surprised if we see some narrow range-bound markets for tomorrow. Hopefully those housing starts numbers at 8:30 Eastern time will kind of kick us into gear here tomorrow. And don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to be there trading this stuff together in our trade room. I would love to have you there, right there with us. I'll put all of the membership links you guys need to get registered and come out there and trade with us every morning in our trade room. 8 o'clock Eastern time. Don't be late tomorrow. Grab the link you need right below me tonight on the blog or in the description of the YouTube video. Let's keep this party going, though. Charts are ready. S&P, NASDAQ, and gold. Don't forget, I will add chapters to the bottom of this video. So if you're watching for the first time, I'm going to go through one by one of these markets. If it's not your favorite, you can always jump around, or you can, like I would always enjoy it, watching the entire video. But you will see chapters added at the bottom of this video here tonight, so you can kind of plug and play around to your favorite markets. Let's grab the S&P first. Grab the S&P here first. What's the key takeaway right now on the S&P? Well, we have this big bear move down, and the key component here is really just going to be a combination of a spike and channel, which is basically what this is, right? Spike and channel going lower, and a trading range down here. Right? We're definitely bearish. There's no doubt about that. Whatever the reason for this spook is, again, I can speculate all day long, right? If you ask the news media, they'll say it's the virus right now. It's tough to tell. But we know the market is bearish. We know, again, that combination of that spike and channel. Now, spike and channels are pretty important, right? What does a spike and channel tell us? Spike and channels, when a market collapses like that and starts to roll lower in a channel, which is basically what we're getting right now, spike and channels tell us to look for a short up around the base of that channel, right? Up around the base of that channel, right where the channel kind of runs into the spike is generally where most short sellers are going to be looking in a spike and channel scenario, right? We saw one today on the NASDAQ as well. We'll talk about that as we go deeper into this video. So spike and channel, that's the first thing, right? First thing is a spike and channel on the chart. That's kind of one big component, right? So there's the move down. There is the channel, right? Strong move down. There's my channel right there. Here's the base of that channel, right? We're right up in the base of that channel pretty much right now. That's one very big factor on this chart right now. The second big factor on this chart is this trading range, right? The trading range. Now, ranges. Whenever we have a bear market into, let's go back here. Whenever we have a bear market into a trading range, what you want to do is you want to find levels of resistance like prior swings or trend lines, or we go over a lot of those details in our video classes, but you want to find levels of resistance overhead, and you want to sell with basically what we call failure patterns, right? You want to wait for the price to pop up. You want to wait for the buyers to try to buy into it and sell into their stop losses, right? So basically, that's the way you trade a bear market into a trading range. The range below it acts as a magnet, right? You find levels of resistance, you sell going back down, right, into that magnet, right? That's the next piece of this puzzle, right? So there's my range down there. Here's my levels of resistance now, right? Got my expanding triangle. I've also got this 58.25 area. That was a big prior swing high before. It's kind of acting as a bit of a pseudo level here right now, that 58.25 here. So as you can see, we're right there, right? We're right in an area again of resistance up overhead, right, of that trading range. So range below, of course, acts as a magnet down below us. Now, there's one more kind of key component on this, and that is, and I mentioned this in the introduction, the strong, right, that strong jump back up here. What does that tell us? Anytime we see a strong move in one direction, we call those open loops in our trade room. Anytime we see a strong move in one direction, we anticipate another leg in the same direction. Right, and here's the kicker. The buyers in this case, who have that strong leg, they will generally try twice to get that second leg. If they cannot get it to work after the second try, they'll generally give up and you know what's going to happen, right? We're going to probably sink back down right into those lows. So it's really, really important here. These buyers have to hold this, right? They have to hold this. If they can't, there's a good chance we roll right back down to retest those lows. So those are the three main components: the spiking channel, the range, and that strong, right? That strong pop higher here. So now you kind of know the lay of the land. How do we buy it? How do we sell it? You know, I mentioned earlier, I would love to grab a reversal on this, right? How could I buy this market right now? There are two basic ways you can buy this thing. And honestly, I have no problem being a buyer on a market like this, mostly because we got that strong move down. They retested that low, right? Because that's what we get when we see a strong move, right? We saw a strong move down. They retest the low, and now we're maybe reversing now, right? So this is a great example of a market that has all the potential in the world to give you a nice bullish reversal going higher. Only problem is we're not quite there yet. Two ways to be a buyer on this. Probably the best way to be a buyer on this would be to wait for this market to see if it can give us what we call a two-try trap. That is a strong move up, a shallow pullback, a higher high in price. If we can get this thing to start to kind of push a bit higher here, I can start looking for traps right down below these lows. Okay, that'll be a really nice trade setup there. We call these two-try traps, right? Two-try traps. So again, we keep running a little bit higher. We see a shallow pullback right to the moving average. That drives the buyers crazy because they're not able to get in. Higher high in price confirms the move. We mark that swing low, and we grab that trap. Now, this pattern, this two-try trap pattern, it could happen really anywhere up here, right? So if it keeps going higher, right, maybe it really jumps, just simply wait for that trap, right, as we're going. Another entry pattern I'd like to look for on the buy side here would be a 1-2-3 reversal. Right? Now, look what's happened the last couple times these buyers have tried to reverse this market. They haven't been very successful. If the buyers can hold that pullback, and again, we already know there's enough momentum here to give them that, to give them a chance to do this, but they got to prove it to us, right? They got to send this thing higher here. If they can get that 1-2-3, what I call reversal, right? 1-2-3 reversal. And the key is that second leg, right? That leg that jumps off the moving average. That leg, what you want to do is you want to grab the trend line, grab a new channel. Okay, don't get lazy and draw the big channel. The big channel is a waste of time. Find that small channel. Okay, and then what happens is you want to drill down to a faster time frame and grab that buy off that low. Now, keep in mind, this is an 8,000 tick chart. Upper left-hand corner, right? 8,000 tick chart. I'm not going to be day trading off an 8,000 tick chart. What I'll do though is I'll drill down to a much faster time frame, and I'll look for one of my two favorite price action setups off the low. My two favorite entries in this 1-2-3 reversal are going to be bear traps and seller failures. These are the two money makers that come in off the low of that channel. Now, I'm not going to go into all the details, the faster time frames, the pattern setups, what the rules are, but I cover all of that in a much deeper dive in a quick start class to kind of bring you up to speed for how we trade every day in our trade room. I'll put a little link up there for you in the upper right hand corner, and that quick start class, again, it'll talk about the right charts, the right time frames, all the indicators, all the price action setups, all the rules. I covered all there because I want to give you kind of a shortcut to kind of bring you up to speed. So A, you can make the most of our time every evening on this video, and B, you're ready for battle with me when you come on and join me every morning in our trade room. So grab that link that popped up there. I'll also put, again, all the important links you guys need in the description of this YouTube video. That's how I would buy this market going forward. How do we sell this sucker, right? How do we sell this thing? Well, again, we're right at a good spot right now, right? We're at a good spot to get short. What's the problem though? Yeah, all that strength, right? All of that strength. So in these situations, if I'm in a good area of resistance, I'd love to be a seller, but with all that bullishness, right? What did we talk about earlier? The buyers will try what? The buyers will try once. Yeah, the buyers will try twice. And then what happens? If they can't get it to work, if they can't get this to keep going, they're going to probably give up, and the price will likely, right, collapse back down into that trading range. Here are two ways I'd be looking to trade this for tomorrow. One, I would love to sell into stop losses, right? Stops be right below those lows. What you can do is wait for those buyers to try a couple times, right? Look for that nice, strong, short signal candle and drop it right into those stops, right? Sell right into those stop losses. We call these 2 try failures because of the obvious, right? 1 and 2 try, right? 2 try failure, shorting now, right? Back down as we go. And then again, don't forget, as you go lower, you can grab that low, grab that high, and then, again, drill down. We're not going to take this on an 8,000 tick chart, right? But drill down, find your bull traps, find your buyer failures, and short off the top of that channel. These are 2 really great trades here, right, as we go. But as you can see, though, we got to wait for those buyers to kind of tire themselves out a little bit because they have so much momentum, right, on their side right now with that strong pop off the low. Now, something else to consider here. If the market was to, for example, really pull back strong, right? Let's say the market's something like this, where it ran lower once, twice like that. Now, in that situation, I would look for a trap. Okay, it's the same basic idea, right? It's a 2 try failure, right? What you want to be aware of, though, is you want to make sure you're risking small and earning large, right? So if I can get those buyers trying once, buyers trying twice, I have all that space, right? That's a risk small, right? Earn large opportunity. But if I end up coming back a little bit stronger now, right, which could easily happen in these markets these days, right, buyers once and slam lower here now, yeah, see, I don't want to take the short right there, right? That's not where I want to be shorting this thing. What I want to do is now look for a trap, right, and trap above those highs. That'll be a much better entry. And again, I cover traps along with all the price action setups in that video class, right? That quick start class I mentioned linked up in the upper right-hand corner. So keep your eyes on this stuff as we get back down, right, to retest those lows. Now, as we go lower, could I buy off this low, right? Like if we end up back at that low here, could I buy off this low? You can, but what you want to remember is all of that momentum is going to be very strong for who? For the bears. Not to mention, there'll be a pendulum swing in play, right? The pendulum swing coming off that high, basically, simply put, if we came all the way back down, if we come all the way back down to that range now, what I can do here is I can measure the amount above the range and I can project that now below the range. So if we end up crashing back into that range, boy, look at that, 4,200 now becomes kind of the mission to accomplish, right? What we do a lot in our trade room is we'll look for that short, right? That 1, that 2, get that, right? Get that reversal channel coming in, right? To sell this thing now all the way back down and right all the way back down to hold that sucker to get that pendulum swing on the opposite side, right? So the more of the story is if we find our way down around that low, be very careful buying this thing back up again because the bears are going to be trying to finish off that rotation, right, as we go back, right, again, as we complete that pendulum swing. What we might easily see is we may easily see this market go back, retest that low, and then just like we talked about, right, with all of that momentum, the bears try once, right? The bears try twice, and we can buy it right back up again. Okay, that is okay. That works fine. But again, you just want to make sure, give the bears a couple chances here to kind of tire themselves out. Now, honestly, you could find that buy pattern right at the low of day. You could find that buy pattern at the low of this channel. In all reality, it could be anywhere down here, really, going back up into that range overhead. We'll know more about that tomorrow, right, once we kind of get our hands on this price action. But now you get a pretty good idea for my favorite trades, going long, going short here, and what to be kind of keeping your eyes out for tomorrow. We'll cover more details tomorrow morning, of course, in our trade room. Let's keep going, though. Let's keep going. S&P's relatively straightforward here for tomorrow. How about some Nasdaq? Nasdaq is very similar to the S&P. The big difference, of course, on the Nasdaq, we're definitely bearish. We got that, right? That's similar. We have a range here, but you'll notice the range on the Nasdaq is definitely a lot more pronounced, right? It's not so much a spike in channel as it was on the S&P. It's more of a Nasdaq. Now, or it's more of a range-bound market. Now, we certainly did see a spike in channel, right, earlier on in the NASDAQ today, right? Strong move down, spike up, and where do they go back to? Where could we possibly imagine to see bears coming in on it? Yeah, shocker, right back up right at the base of that channel. Now, look what happened on that. I find this very interesting. Look what happened. The bears got exactly what they wanted, right? They got that pop up. The buyers tried and failed and right back down again. But look what they didn't do. They didn't retest that low. Incredible, right? So the bears got everything they want, a silver platter, but they couldn't, right? They couldn't retest that low. This is exactly what might be coming here, right, on the S&P, right? We may end up getting that move back down, and then bears trying a couple times, right? Stops getting hit, right? And that rip going higher. This is exactly what we may see 12, 18 hours from now on the S&P. So most important thing right now is we have, like I mentioned earlier, we have a great possibility here for a short squeeze, a full reversal, but the buyers have to hold this, right? This could easily be just a big bounce off these lows, and we may easily see this thing come crashing right back down again. The most important thing right now in my eyes is this range. Right? It's obviously a range market. What do you do in a range market? Yeah, you find levels of resistance above the range and you sell back into it. Right? That's one key component. Then don't forget, you can also take the amount above, right? Measure the amount above, copy that, paste it down. That's going to give you what? What we call it the pendulum swing, right? The pendulum swing, the amount above the range is now the amount below the range. That's kind of an idea there, right, for where that next big objective may be as we try to go lower here. The range is a big magnet. The second big kind of component on this chart right now, I believe, is this trend line, that rising support trend line. Again, that was a result of not getting that double bottom, right, or at least retesting that low here. This is a little more advanced technique, but you'll notice, though, if I take this, we go lower. The bears have this big first try. If the bears can get a big second try, what does that look like? It looks like one of those 2-try failures, right? But it's on a big scale. This is a really exciting opportunity for both sides of the market, because you could easily think you could sell off that, right? Sell off the move higher and then buy it off that, right? Off that trend line coming off of it, where you could really play both sides of this market right here for tomorrow. I think that is a very big piece of this puzzle. Those are pretty much the two main components right now, right? The range and kind of this big 2-try rule. Now, again, how do we buy it? How do we sell it? It's relatively similar to the S&P, but I think there's a lot more potential right now for these buyers because, again, right, the S&P had no problem retesting that low, right? The bears come down. They have no problem retesting low on the S&P, right? The Nasdaq, not so much. Now, this may just be this may be a head fake, right? It may not be nothing. It might be a nothing burger, right, as they say, but there's definitely potential for it right now. So how do we buy it? How do we sell it? It's, again, pretty straightforward here. To be a buyer on this, it's just like the S&P, right? If I can get this thing to push a little bit higher here, right? A couple green candles here as we come into the open in Asia. Strong move up, shallow pullback, higher high in price, right? That's a beautiful trap spot right there, right? That will definitely be on my radar as we go higher here for tomorrow. Targets, of course, back up, right, to retest the high, double up target, up overhead here. This is very similar, of course, to the S&P. Maybe we don't see it go higher, though. Maybe it pulls back, right? Maybe it pulls back to the moving average. But unlike the last couple pullbacks, the buyers can actually hold, right, and jump off it. This is a 1, 2, 3 reversal pattern now. Mark up that high, right? Mark up that low. And again, remember, we're not going to simply buy the pullback on this. I wish it was that easy, right? It's not that easy. We're going to drill down, right, to a faster time frame. This, of course, again, is a 4,000 tick chart on the NASDAQ. There's no possible way I would want to use a 4,000 tick chart. The size of that stop loss would just be enormous. We want to use much smaller stops than that. So we'll drill down to a faster time frame. And again, and we covered this all in that quick start class, right? Bear traps, failures. Failures oftentimes lead into into pullbacks, into strength. These are four of my favorite price action setups. I don't use indicators to enter trades with. Indicators are lagging. Indicators are, in my opinion, a waste of your time. If you're serious about your trading, you got to learn to trade price action. By the time indicators signal the entry, the price action traders have already usually got their first target. Again, I cover all of the entry setups I'm talking about. I cover all of those in that quick start class, right? Linked up in the upper right-hand corner. So pretty easy, right? As the market goes higher here. And, same thing for the S&P. This will also apply to the S&P. If we were to go higher here, right, into a range at some point tomorrow, we definitely should be anticipating some sort of range tomorrow, because anytime you see this much movement in one day, oftentimes the next day is going to consolidate. It's the exact opposite, right? If you see a really tight, consolidated range today, oftentimes the next day is going to be a much wilder day, right? So big, wild momentum moves here for today. Wouldn't be surprised if we end up seeing this thing go sideways as we go tomorrow. What would the plan be? If we start going sideways into a trading range, what do? We find levels of support, right? Like prior swings. And what do? We wait for that pullback. We trap in those bears, right? That's the key, right? Trap in those bears and use those failure setups. Again, don't waste your time on divergence. Don't waste your time on MACD hooks and Bollinger Band crosses, right? Trade the price action. I covered that stuff, again, in the quick start class in the upper right-hand corner, right? So definitely watch out for that range tomorrow. And this range, of course, also applies to the S&P as well, right? If the S&P was to go sideways as it goes higher, right, into a trading range. So pretty straightforward there, right, as we try to buy this thing. Now, the fun stuff, right? Here comes the fun stuff for the NASDAQ, here tomorrow. You could easily see, if I was to copy this line right here, bring it up right here, you could easily see this could be turning into, if you're an old dog like me, right, they call these flags, right? Big bear move down, right, into shorts off the top of that channel. The problem, though, is momentum. So how do we sell a market like this? We got to wait for these buyers to try once, wait to try twice. Their stops are sitting right below that low, and we can short, right, going back down into those stop losses. I covered this two-try failure pattern in a lot of detail in that quick start class I keep talking about in the upper right-hand corner. So I'm not going to go over all the variations here in this video, but I do go over a lot of the smaller details. Most importantly, the variations of this. You'll see those examples in the quick start class. Again, we call these two-try failures, right? 1 and 2. And then the only challenge with this one is we're probably not going to have that space we need, right, to grab that pullback, right, on the way there, because of that rising support trend line. So this is definitely where I think it makes perfect sense to look for the short. But then once we get down to that low here now, right? This is exactly where you start looking for those bears trying once, bears trying twice, right? Stops are now sitting right above that high, right? Same basic idea. It's an overall bear market. We're at an area of support. I can't just buy at an area of support, right? If we're that bearish, you've got to wait for these bears to try a couple times and then hit them right into their stop losses, right? So once you see those bears, once they try a couple times now here, you're at support and hit them right where the stops are, right? Buy right into those stop losses. I'll cover more of the specifics on that entry pattern in that quick start class. But most importantly, though, right, it's going to be buying right into stops. And then this is definitely one you can definitely now start to look for, that reversal pullback, right? It's a two-try failure, right? Into that, drill down, find your bear traps, find your seller failures, and we're buying off of that low here. If we can get this long, you definitely want to try to leave a runner on that one, because that will be the bears trying once, the bears trying twice, and the two-try rule is prevalent throughout the entire financial markets. When the bears try twice and can't keep the party going to the downside, they generally will give up and let the buyers take control, and that's why I say leave the runner on that pullback, right? Leave the runner on that pullback. And also, too, keep in mind, too, we may see it run lower, bears once, bears twice, and oftentimes these things just rip, right? They just rip running higher. That's exactly where you look for that two-try trap, right? If it really rips higher there, right? If it rips higher, you're probably not going to get the pullback. So it really rips. It's a failure, right, into that. Again, we call that two-try trap as we go higher, right? So you can see there's plenty of ways to trade this tomorrow. We'll kind of fill in the gaps there tomorrow morning, right, tomorrow in our trade room. And then moving on now, I guess that covers all the bases that we got the up. We got the sideways, we got the down. Boy, I'll tell you, if the market was to collapse off the high here, really run, right? Really run. How would I trade that down there? This would also apply to the S&P, right? We have that trend line, and that trend line is going to kind of keep me out of this short, right? I'm not going to be able to grab that, right, that short as we go down and then up and over, right? I'm not going to be able to grab that one. If they were able, though, to keep this thing going, what would the plan be? The plan would be that two-try trap right down here as they try to complete that pendulum swing, right? So we'll definitely look for that short off the high. I'll be hesitant to sell into that trend line. If they keep on rolling lower, though, traps, right, as we finish off that pendulum swing right on the opposite side of that trading range, right? And again, we cover all these price action setups in a lot more detail in our video classes. All right, guys? All right, so that covers pretty much all the details here. I don't want to go over too much longer here on this video. I really appreciate you guys, of course, staying tuned in here for the entire lesson here tonight. How am I doing so far? Am I doing pretty well? Right, put a thumbs up here so far on the video. If you guys are enjoying it so far, hit that thumbs up here for us. I hope by now you subscribe to our YouTube channel as well, because as you can see, I'm not messing around this stuff. How about some gold right now? Yeah, how about some gold here? The yellow metal, the GC. Gold is probably the one mark that has the most kind of question marks for tomorrow. Really there's probably two main components on this chart right now. One is the weekend gap, and I think that's probably the biggest clue. Maybe not the biggest clue. I would say it's one of the key components here, because you'll notice all of that movement, right? Big move down, big move up, big move down. Look where they ended up. They pretty much end up right back where the day began, right? Right back where the week ended last week. What does that tell you? All of this movement, all this momentum, all this shake and bake back and forth, and where do they finish? Right back where they started. So that's why I said earlier, it almost smells like we have a bit of a range coming here tomorrow. There really isn't much of a range, though. You see that, right? There's no obvious range like there is in the Nasdaq and the S&P. This is a really good example, though, of when you see a wild market anticipate tomorrow may definitely be a consolidated market, right? So I don't have the range to share with you because we don't really see it right now yet, but it'll probably be somewhere right around this middle area here. I can't imagine it wouldn't be. It may not be. We'll see what happens. The second piece of the puzzle, I think, is we saw this big move down, right? That big move down to kind of begin the day, and you'll notice they gave it all back. Almost all of it, right? Almost all of it. Again, anytime we see a strong move, right? Strong move in one direction, a shallow pullback, and a higher high in price, what do we look for? Traps, baby, right? Traps. That's exactly what's going on right now, right? That's exactly what's going on right now. That is that two-try trap pattern I was just talking about on the previous charts, right? So the buyers have all of this momentum. The bears are still here. They're still barely here. They haven't taken the highs out just yet. But as you can see here, that open loop, as we call it, wants to be closed. And so buyers should be able to close that loop. This turns into that second key, it's kind of second piece of the puzzle. I can then use that size of that leg, and I can now project that up, and that gives me now my big target overhead here, right? And you'll notice that puts me back into a range. This is kind of the range we were trading in late last week, right? That range acts as a magnet. So buyers, of course, right? Buyers would love to get this market ripping higher here, right? Finish off that measured move and get back into that range. Sellers, of course, they're still breathing. They definitely still are. Again, we haven't officially taken out those highs yet. So in all reality, the bears are still surviving, right? They're going to want to go back, and they're going to want to retest that major low. Right? And right below that low, you get a big bottom there at 1790, 1791. That is a big bottom below that big range we had, way back at the beginning of this month. It seems like forever ago, that trading range around 1800. So we got that big kind of 1790 area. That would be an easy objective there for the bears. Boy, this is one of those kind of wait and see markets right now. It really is, unfortunately, because unless you got long on that trap, right? You can't buy it now. This is definitely not the spot to be getting in right now. If you bought right now, your stop would be way down here and your target would be way up here. Okay, that's the opposite of what you want to do, right? If you buy right now, where's the objective? Back to retest the high, right? Close the loop, as we said earlier, right? So if I buy right now, I'm buying with a small potential reward and a bigger risk. We don't want to get in as we stand right now. In my eyes, the easiest money to make on gold would be if we could see another leg higher, because then we know exactly where the market's going. If I can get that strong leg higher here, get that shallow pullback as the bears start realizing they're in trouble, I can grab that trap, right, with that 2-try trap setup. Again, we've talked a lot about that pattern so far, right? I cover it in a lot more detail in the quick start class, right? So again, 2-try trap, or maybe we see it pull back here, right? Goes up, pulls back, and goes here. Grab that new channel. Mark that high, mark that low, right? Drill down to a faster time frame. Again, this is a 1500 tick chart. I'm going to use a much faster time frame to actually enter those trades. And again, as I've mentioned a couple times already, my 2 favorite price action setups on these off the lows are traps. Those are always the best. Failures are a close second place. Failures usually lead to pullbacks, and pullbacks into strength. Again, I cover all those details in the quick start class. If you've taken the course already, you know exactly what I'm talking about. If you haven't done so already, what are you waiting for? Grab that quick start class and learn all these details. That way you can kind of level up your game with me here every evening on this nightly newsletter. Got a pretty good plan of attack as the market goes higher here. If the market goes lower, that's the challenge. The challenge for tomorrow is if we go lower, because here's the big problem. Here's the big problem. If we go lower, now we have falling resistance, and not just that resistance, but that coming down overhead too, right? If they take this thing lower, that is an embarrassing failure for the buyers. It really is, right? Maybe not embarrassing. I don't think they take it personally. Do you think they? Yeah, I don't think they do. The reality though is, if they do pull back lower now, right? If they do pull back lower now we have susceptible for a reversal. See what I'm doing right now, right? Buyers once, buyers twice here. Now think about this, right? Because this is the way we can look to trade this now. So imagine here, let me zoom in on this, right? Imagine we don't retest the high and we pull back, right? Now what I can do is to be a buyer on this, I've got to respect that trend line coming down, right? I mean, you have to respect the trend line. You got to respect the bears, right? That really, for the most part, still own this market right now, just by a little sliver, right? What do? You wait for the bears trying once, you wait for the bears trying twice, and we buy into it from there, right? Again, wait for those bears to try a couple times, and we'll buy right into those stop losses. It's very similar we saw right here, okay? Where bears try once, bears try twice. Okay, now, at the same time, though, we could easily see this market run up, and then same thing, right? Come over here now, buyers try to get long, right? They get stopped out, and we're selling into those shorts. So you could definitely see, you could play this, right? The hardest one will be that buy. The hardest one will definitely be the buy. The buy side will be the hardest, because you're going to have to convince a lot of buyers that we're still bullish on this. All right, so that's going to be the way to trade this thing as we go lower, right? We go up, buyers try to retest, they fail, right? We come down, trend line comes over, right? Moving average comes down. Bears try once, bears try twice, perfect. Stops are right there. Buy into those stop losses. Again, and this is obviously not drawn to scale, I'm just simply illustrating. We go up now, we're into the top of that trend line, right? Now the gig is up. Right now, everybody knows those buyers have failed. Now, wait for those buyers to foolishly buy into that resistance and hit them right in their stop losses with your classic failure setup we talk about in our quick start guide. Again, target will be back down around that low. Now, this could get much easier. It really could, right? We may see this market just collapse, right? It may collapse right down. We may see that moving average come steep, shallow pullback, lower low, right? And we're going traps, right? So traps could easily be the case here if we start to see some acceleration, right? Some acceleration going lower here, right? Acceleration going lower. And don't forget too, mark up that low, mark up that high. It's not required, but if I could get a trap off the top of that channel, you know what I mean, right? That would be even better, right? Even better for that short, again, going back down, right, to retest the low. Remember, though, you're going to want to get that entry before you retest that low. And that's going to be the sell side on this is not going to be that easy, right? Unless, of course, we get this 1, 2 trend line coming over, get above that moving average, right? Buyers fail, and back down we go. Be a great short to go back down to retest the low. Then you've got the hard part, is the range, right? The range. At this point, we don't really know where that range is going to be. It will probably be somewhere right around here. If we start going sideways here, what do? Well, first of all, what does it do? What does that do? It basically pins the value of this market, at least for now, right around that 1810, 1811 area. If the market goes sideways with a bull bias to it, what do? We find levels of support. What I'll do is I'll draw a trend line off of those lower lows, wait for the price to pull back, and then trap in those bears and buy into those stop losses, okay? Using those failure setups at a level of support below the low of that trading range. We've talked about this strategy a couple times already, right? Remember, find support below the range. I love those expanding triangles. Use the range as a magnet. And then don't forget the size of the move down, size of the move up, right? There's your target 1 at the top of the range, target 2 on the pendulum swing, right, on the other side of that trading range. That is how you want to buy this market right here for tomorrow. And then again, don't forget, if the market was to, let's say, for example, real quickly before we wrap up, right, if we were to go, let's say we do get that run lower, right, the bears come in, they try to get short, they fail, and the market now rips, right, and runs higher. This is that classic pendulum swing rotation. We know where the market wants to go. Now we're looking for, right, those entries, right? Give me that 2-try trap. You know what I mean? Right? Give me that 2-try trap. Give me that failure. Give me something, right? Something on that rotation on the way back up to retest that pendulum swing, right? I can buy it support below the range. I can also buy while the market is making that turn, right? Either with the hidden channel or with that 2-try trap. And I realize I'm covering a lot of details right now, but I know a lot of you guys have been with me for a while, so you guys can handle it. If you're here for the first time, though, right now, or you're relatively new to this stuff, you definitely want to grab that quick start class I mentioned earlier. I'll put that link in the upper right-hand corner. That way you know what I'm talking about when I say pendulum swing, traps, breakouts, reversals, right? Things like that. You know my definition and how we qualify them. All right, guys, we've given all the good stuff here tonight on this video. Now all we do is wait here to see what we get here in the overnight. Will we get the reversals on the S&P? Will we get the range on the gold? Boy, I'll tell you, tomorrow we're going to have a good day tomorrow morning in our trade room. I would love to have you there, right there with us every day at the opening bell. Don't forget, you can register as a member and come out and join me every morning at 8 o'clock Eastern time. We'll trade this stuff together. It's a great time for new traders and experienced traders, so make sure you grab that link in the description of this YouTube video. Or don't forget, you can always call the office. I've been more than happy to walk you through the entire sign-up process. We got live chat on the left. We got live chat on the right. And boy, oh boy, what a great time tonight on this video. Hope you learned a bunch. Hope you earn a bunch with it tomorrow morning. And hope I'll see you tomorrow in the trade room right there, trading right along with me. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will you? Thank you for tuning in. And come back and see us again next time. Adios, amigos. Bye-bye for now.